Hello all and welcome to the channel. My name is Andrew and this is Life Hacks. On today's video we're going to be talking about ways to save money. And the goal of this video is just to be like the ultimate guide for saving money. Something that you can come back to. The video is going to start kind of simple, but it's going to go into some really advanced topics on how to save money. What we're going to do is, as we go through the ways to save money, I'm going to show you how you can take your savings rate from almost 0% to almost 100%. I know that sounds crazy, but it actually is doable. All right, let's assume that your savings rate is about 0% right now. Let's see how we can bump that up. And first, we actually need to define what savings rate means. And saving rate just means how much money you're able to put into your savings account at the end of each month or into an investment of some sort at the end of each month. If you have a paycheck that comes in and all of that paycheck goes out to some sort of expenses and bills and housing and the such, then your savings rate is 0%. If you're able to put a little bit into your savings account each month or into some sort of investment, then your savings rate is greater than 0%. Again, in this video, we're going to be talking about how to take it from near 0% to almost 100%. Now, the neat thing about savings rate is that your savings rate is directly correlated to the time it would take you to retire for an indefinite amount of time, given you take your savings and put them into some sort of investment that has a consistent return. Now, here's a chart that will tell you just how many years you would have to save at a given savings rate in order to retire. All right, so step one is to open up a Cash Rewards credit card. I swear to you, this is like the best thing since sliced bread, probably even better than sliced bread. All you have to do is spend about 20 minutes online for an application to apply for a credit card, and that's the only time and effort you have to put into this. And what happens is that the world becomes discounted to you. For example, I have a 2% Cash Rewards on my credit card, so every bit of money that I spend on my credit card, I get 2% of that cash back to my account, into my bank account whenever I want it. The power of this is whenever you go to eat out for food or go to Walmart to buy something or go to any store that you like to visit, literally every item that you decide to purchase, it is 2% off or whatever your Cash Rewards balance is. Mine is 2%. I'd recommend trying to get something around in that range. But if you can get the whole world for 2% off, guess what? You can now save that 2% and your 2% is now added to your savings rate. Now, realistically, you're probably not going to purchase everything with your credit card, so let's actually assume that your total effective saving rate is only going to be increased by about 1%, even though your credit card may give you 2%. All right, step number two. Now, we started small, and we currently have an effective 1% savings rate over our 0% that we had previous. Now we're going to jump into something that can get us even more of a savings rate. And now, since we've got a credit card, let's actually start examining our credit card statements at the end of every month before we pay off our balance. By the way, make sure you pay off your balance at the end of every month so you don't incur any interest. As you examine your credit card statements, there's two things that I want you to look for. The first thing is I want you to look at what you're spending money on, and I want you to be critical of yourself on what you're spending your money on. If you're going to the store and you're buying some clothes for the third time this week, ask yourself if it was really necessary to purchase those clothes. Was it really necessary to purchase that item of furniture that you got at the store? How about that extra cake that you got or that dessert that you bought on the way home because you were feeling like you had the sweet tooth, whenever you really perhaps had some sugary sweets at the house for you? Did you really need all those items that you purchased? Be critical, and if you didn't, I challenge you to be better next month. As you start getting better and being critical in what you purchase, I want you to start being proud of the days where you have zero credit card transactions. By eliminating all of these small little purchases that you do here and there, they can really start to add up. I remember before I got big into saving money, I would look at my credit card statements and I would have like 3 or 4 transactions per day. And honestly, I couldn't even tell you what the purpose of some of those transactions were. When I really started examining the small expenses that I had and started cutting out some of those small expenses from my credit card, I would say that I was able to save about 10%. Just to make the math nice, let's just say that that's 9%. We'll be a little bit conservative. Now we can take the 1% from opening up the credit card originally and getting our 2% back, and the 9% that we're now saving from just being critical of what we're spending our money on, we now have a savings rate of 10%. Step number 3, we're going to look at all the recurring expenses that we have on a monthly basis and question if we really need them or not. And that's the big thing. An example of this would be recently I just got rid of cable television. I was paying a Netflix subscription every month, And I realized that most of my time on the television was spent watching Netflix and very little actually watching television. So I actually completely cut out cable TV from my life, and I swear to you, I have not looked back from it. I do not regret it in one bit. Also, here's something that's maybe a little bit more crazy, but I actually got rid of my internet as well. I realized that I got unlimited mobile hotspot data on my phone, so why not just use my phone's cell service to give me the internet at home from my laptop? Some other examples might be Amazon Prime. Do you actually need that? How about auto insurance? How about home insurance? When was the last time that you actually searched for auto insurance? I just did this recently and I saved about $50 a month just by shopping auto insurance and trading to a different carrier. Literally, it's the exact same coverage, but I'm saving $50 a month. If you go through and look at all the recurring expenses that you have, maybe you can start cutting out, maybe you can start shopping around, getting better deals. And I found whenever I did this, I was able to increase my savings rate by about another 10%. Congratulations. By doing this, and I'm not saying that this is easy, but if we do this, your savings rate can now be at about 20%. Now that we're saving a lot more money by looking at what we're spending and looking at the recurring expenses and being proud of the days where we have zero credit card transactions, now would be a really good time to start paying off any and all of the bad debt that you have. And by bad debt, I would probably define bad debt as something that's maybe greater than 5% interest rate and isn't actually helping you achieve anything. For example, if you have credit card debt, pay that off because that's probably upwards of 10, 15, 20% interest rate, and that's really not doing you any good. Versus perhaps a mortgage. Mortgages nowadays we can usually get for less than 5% interest rate, and at least as you pay off your mortgage, some of that's the principal and you're paying down your equity. So I wouldn't necessarily go and rush to pay down your mortgage, but I would go and pay off your credit card debt and any other kind of consumer debt that you have. Now, I'm not really sure how to put a savings rate increase by the result of you paying off your debt, because everybody's debt varies widely. But just know that you can save a lot more money by paying off your debt when you don't have those recurring expenses of debt each and every month. Now it's time to have a little bit of fun. Now that we're done nitpicking all of the small purchases that we do on a daily basis, we can now get into some of the really big ticket items. And the number one item that people spend the most money on is housing. If you were to go up and add up a mortgage and all of the repairs and maintenance that you have to do a house, property tax, and any other kind of expenses that comes up with owning a house, on average it comes out to about 30% of your income. That is a staggering amount, and we should really try to attack that and reduce that. One idea for saving money on housing, and this one's going to seem really obvious, and I have to say it because it's actually not that easy to do, but it can make such a big difference. And that is to just simply buy a house or rent a house that's really within your budget. It's very easy whenever you go house shopping to find a house that you love and perhaps it's over budget, but you decide to purchase it anyways. And that's how people get into the trap of spending 30% of your income on housing. By purchasing or renting a house that's below your original budget, by shopping around for property taxes, by doing projects around your house yourself instead of hiring it out, and even if you were to rent out a room in the house that you either own yourself or you rent, then you can actually half the 30% housing cost that most people have, which gives us an additional 15% savings rate. However, it actually gets better than that. There's something called house hacking, and that is purchasing a house or renting a house that's way larger than what you actually need. And this is a little bit counterintuitive to what I was just saying about purchasing a house that's under budget. But if you could live by yourself and you purchase a 3-bedroom house and you rent out the other 2 bedrooms, or maybe you purchase a triplex or a duplex and you rent out the other portions of the home, you can actually potentially make your housing costs go to 0. More on this later, but if you can house hack, we can now make our expenses 0% on housing, and that is profound. The second biggest expense that people have behind housing is transportation. And transportation typically includes the cars that you own and drive. If you're one to always purchase the new car, you have the best car insurance, and you always take your car to the dealer for even small repairs, then you are probably spending 15%, maybe even more, on your transportation cost. 15% is just the average. However, I'm here to tell you that there is another way. My recommendation is to go out and whenever you need a new vehicle, buy a vehicle that's within about 2 to 3 years old. You can potentially get the car for about half off what the original price was, just because there's such a steep depreciation on cars. in the first 2 to 3 years. But if the car's only 2 to 3 years old, the car is still practically new, and you're probably just going to be the second owner of the car. I can tell you that the 15% cost that most people spend on transportation can be eliminated down to about 5% of your income if you don't have a car payment, you take a lesser car insurance, and you do some of the repairs and work on your car yourself. The third biggest expense that the average person has is food, and food usually accounts for about 13% of your income. I'm going to make food very easy for you. There's one very easy way that you can cut your food expenses down quite drastically, and that is by reducing the amount of times that you eat out and increasing the amount of times that you cook in at home. And as an added bonus, cooking at home is usually a healthier option as well. I have found from my experience that if I cook at home, I can typically spend about 8% of my income on food versus 13%, which gives you an extra 5% savings rate. Congratulations, you've actually made it to the last step now. If you've done everything in the video so far, your savings rate could be about that number right there. And that's a pretty impressive number. However, we're still a far cry off from 100%. And here's how we're going to get to a near 100% savings rate. We have to investigate the other category. Now, items in the other category can include things like debt. We talked about debt earlier, and it was difficult to determine exactly how much we could save by paying off our debt, because everybody has a different amount of debt. But if you were to pay that off, you will increase that number right there. Something else that may be in the other category is expenses that may just be necessary. For example, health insurance. That is something that we all need. Perhaps recurring health expenses, like if you need medication of sorts. However, the last thing in the other category, and the biggest thing in the other category that I'd really like to cover, and it's the thing that most people don't like paying, and that's taxes. Taxes is probably the reason why that number is not near 100% yet. But we can get there. On average, people pay about 30% of their income away to taxes via income tax and things like Social Security. Something that they never even see. It just gets taken immediately out of their paycheck and they never have access to. Fortunately, I have good news for you. Income taxes are usually one of the biggest taxes that we pay. However, it's the one that we can also control the most and actually bring down the most if we're a little bit clever. There's two primary ways that you can lower your income tax. One is very easy and one is a little bit more difficult, but absolutely still manageable. The first one is by starting to put money into your 401k. Every bit of money that you put into your 401k is money that is not able to be taxed by the government through your income tax. The second way is by starting a business. And you don't actually have to start a business in the sense of like you need to sell a product or a service. You can actually start a business by becoming an independent contractor. Here's an example of what I mean. I was hired once to provide services for clients. And whenever I was hired, I was given the option of either being paid through a W-2, which is how most people are paid, or by being an independent contractor. I chose to be an independent contractor because as soon as I decided to make that decision, I was now my own business. Now, since I had my own business, I was able to incur income, which was paid to me by my employer, and I was able to have business expenses. If you are able to be paid as an independent contractor, I highly recommend it so that you can incur business expenses. Let me share with you some of the business expenses that I had. So the business that I was in, I had to meet with clients and I provided a service to these clients. So since I had to get to the clients, I needed a way of transporting myself to visit the clients. So I bought myself a car. And guess what? Every expense of that car that I purchased was written off as a business expense. Completely legal and in fact even encouraged by the government. Now, every time I'd go drive to go meet a client, every expense that I would incur to go meet the client, I would write off as a business expense. Guess what? As I would go meet the client, sometimes we would go get lunch together. Lunch is something that I would have purchased anyways. However, since I did it with a business client, I was able to write it off as a business expense. There are so many examples of business expenses that you can write off. And every business expense that you write off shows less on the net income that you earned, meaning that you'll be taxed on less of the money that you get. Now you might be saying, Andrew, I can't get paid as an independent contractor because my employer doesn't allow me. And perhaps you don't want to start a business or you don't have any ideas to start a business. So you're saying, well, how do I get the tax advantages of having a business so I can write off business expenses? Unfortunately, there's no way around that. You're going to have to start a business. But I've got an idea for you that almost everybody can do, and that idea was something that was said earlier in the video, and that goes back to house hacking. And house hacking is about owning a home, renting out some areas of your home, having their rental income pay the mortgage, and you effectively live for free. That's house hacking. Well, guess what? House hacking is a business. Here's how it can help you. If you're getting rental income from the people renting out rooms in your home and you're house hacking, every expense that's related to your house, you can then use as a tax write-off in your business. Now, I've got an example for you of how owning this house hacking business can work to your advantage. Say you're in the house and you're collecting income from the people renting rooms in your house, and you want to get a new refrigerator. Say you want to get a refrigerator because your old one broke, or maybe you just want to modernize your old one. Now, if you didn't have this business, you would have to go and you'd buy a refrigerator, and that would just be that. But now, since you have the business, you can take the business income that you had to now purchase your refrigerator and take the refrigerator as a business expense, lowering the amount of money that you show to the IRS. Now you've lowered your tax burden and your tax will be less. Do this with everything that you can legally, and you will pay very little in taxes at the end of the year. Now, here's an example of how you can lower your tax burden without even actually purchasing anything. The IRS allows you to depreciate your home over a given period of time. And through depreciating your home, you're actually showing effectively a business expense even though you aren't actually purchasing anything. If you learn all the different creative ways on how to reduce your tax burden, you can actually get to the point to where you just don't pay any taxes at all. This is how many of the wealthy people don't pay taxes. And don't get me wrong, this is actually not a bad thing. It's legal to do, and the government actually encourages it because it can stimulate the economies in other ways than just simply paying taxes. Through opening up a business and being creative about how we can save on taxes, especially income taxes, we can then get our savings rate to actually near 100%. If you've made it this far, great for you. Thanks for watching. I'll see you next time.